everyone. I wanted to give a quick portfolio update and then talk a little bit and have a discussion about why I think new investors lose money. And this isn't clickbait, it's not, it's an actual reason why new investors lose money and what you can do about it. And everyone at first loses money. It's just how it happens. It's just what happens to everyone. And I think there's a lot of misleading information out there regarding investing, and new investors are always super in tune about their investments. So I think this is a good video for pretty much everyone to watch. And those who have been in the stock market for a while now know that this happens to everyone. So first, I'll get into the portfolio update. Not much has changed with Robinhood besides the cash management. If you haven't seen that video, I'll put a link to it. Put a card and I'll put a link in the description. But yeah, I'm going to be removing a lot of these stocks and just kind of going into ETFs just to kind of keep it stupid simple, keep it where I can not get confused on how much I'm supposed to have in Robinhood and stuff. And I'll probably just be buying a share of each ETF, like of an ETF each week, and that's how I'll be investing in my Robinhood account. M1 hasn't changed at all. It's got some pretty good returns. Real estate is finally up. It's up today. It's finally, going up, and not much I can say, but I'm happy. I invested in what was low, I think, so it's going to go up now, and hopefully keep going up and pay me dividends. So M1 Finance is doing fine. I invested $100 this week. I'm up $44, and in my Robinhood account, I think I'm up a little bit higher than that. Yeah, $61, but it's about the same increase. So a 1.15 and a 1.24. Yeah, pretty much the same increase. I think just the stock market was up this week. So that's how my portfolios are doing. Again, I'll have links to my portfolios in the description. I'll have a link to every stock that I have in my M1 Finance in every sector, and I'll have a link to my Robinhood refer account. So if you start a Robinhood account, me and you both get a stock. And if you need to pause the video, here's all my stocks on Robinhood. I'll just show you them real quick. I've been getting a couple of requests for this. Pause the video whenever you want and check them out. I have some financial analysis on a few of these stocks, like Avgo. I really like that one. I have one on Main Street Capital. So yeah, if you want to look at a few of those videos, they're in the financial analysis playlist on my channel. So now I wanted to get into why I think new investors lose money, especially in the beginning. I lost money. I'm guessing pretty much everyone watching lost money in the beginning. That's just what happens. It happens to everyone. And so let me get into why and the misleading information out there. So here's the cash amount that I put into Robinhood. It's $4,765, right? And as you can see in the beginning, it went down. It went down, negative $14 there, negative 3%, and it went all the way down, negative 1%. And it didn't go above that, it just started losing money immediately. I never saw any gain in money. I was like, what is this? This isn't how it's supposed to be. I'm supposed to be gaining money. And then all of a sudden, it went up. And so during this is a long time here. This is from April to September in November in 2016. So it's half a year, and the stock market was just completely down. And what happens to a lot of new investors is they put in their money, right? And then it starts going down. And they're new investors, so they're looking at their portfolio every day. They're buying and selling every day, and they're wondering why they're losing money, and it happens to everyone. There are ups and there are downs, and you have to just ride through the downs, and eventually you'll get to the ups. That's just what happens. So why a lot of new investors lose money is because they sell out, here. They sell out when they're down $40, which isn't a lot, but it's still losing money. And they're wondering how everyone else is making money. And so how everyone else is making money is just by sticking in there. by being consistent, by consistently putting money in. You don't want to put in, again, you want to dollar cost average down. You don't want to put all your money in the stock market in one single day. Bad move. You want to just slowly deposit it over time, and eventually you'll start making gains. The stock market will just start going up and you'll start making gains. That's just what happens. So, the reasons are that new investors lose money is because at first, the stock market, it could be going up, it could be going down, but you are much, much more likely to actually lose money that you invested um, in the beginning stages. Now, now that I'm up, 13% or so, I'd have to lose $600. I'd have to lose $600 before I start getting into the money that I actually put in, right? So it makes it a lot harder for me to lose money that I actually put in rather than what I gained through investing. So when you're first putting money in, you're much more vulnerable to losing your actual dollar amount that you put in the beginning. My M1 Finance is the same thing. So I'm much more susceptible to losing. I have only a 4% return, only $100. If the stock market takes a 7% dip, in the next week, I'm going to lose money. But on M1 Finance, but I'm not going to lose money. On Robinhood, I'm going to lose, my dollar amount, but I'm not going to lose the actual amount of money that I put into my portfolio. I just would have lost some of my gains. So I hope that clears some misinformation up. It's all about just sticking in there. At first, your portfolio might be negative. Don't worry about it. Keep adding money. Just try not to look at it, to be honest. Put them in some ETFs and try not to look at it, and come back in a couple months and it'll probably be up. And if it's not, then we're in a recession or something. Then just stick in there. And that's really what you have to do. And I'll show you December too. So December 2018, as people who were invested remember, it was a pretty bad time. It was a pretty big correction. It was like an 18% drop. And I actually went down so I went from 5% up to almost 1% down, like in the actual money that I put in. Out of the 4,750 that I put in, I actually went down, $38. So that's it just goes to show that you don't sell out here. Just hold it, add money if you wish, and it'll come right back, bounce right back. So again, why new investors lose money is just because at first you're much more susceptible to losing the actual amount that you put in rather than the gains that you have received from the stock market over years of investing. So this represents 3 years right here. So keep that in mind. This first 6 months I was down, and I just didn't sell out. I just left my money in there and decided I'll just hold it and see what happens, and eventually started going up, and I started getting wiser and investing in ETFs and smoothing out my portfolio, and we're getting to where I want to be on my all-time gains, my year-over-year gains. So I hope this cleared some things up. If you're new investing and your portfolio is red right now, and you're down then on the money that you actually put in, the only thing I can say is just make sure that you're fully diversified. You're kind of tracking the market, and don't sell. Just kind of hold on to what you have, and don't sell anything. If you're not diversified and stuff, then just look into some diversification tips. I'll make a video here soon about diversifying your portfolio and what I think is a good split on your sectors and your portfolio, and how many stocks in each sector, etc. But if you're new in investing and you have a red portfolio, just hang in there. That's the best key I can give you. Stay consistent, and I promise that it'll go green if you're diversified. So I hope this cleared some things up. If you're new, hang in there, and I'll see you guys in the next portfolio update. Peace.